Welcome to ThinkMarkets market update. Cable found resistance at 135.30 plus yesterday and actually is losing the 13500, very important level. Following yesterday's, I would say, three-prong catalysts. One was disappointing PMI data. The second one was a rather more hawkish Powell. And we also had other data from the public sector in the UK, which showed that net borrowing in August came in well above forecast. And that actually raised concerns ahead of November's budget. So all these signals or events, in my opinion, have cable moving lower to the downside, and the bias appears to be, at least in the short term, to the downside. Now let's look at the chart, and this is where things are getting interesting. Obviously, in the longer term, if we look at the price action, we still remain in upward channel. Okay, and this where exactly I am pinpointing the interesting level. Okay, if we do lose this channel, there is going to be a higher chance of a move down towards the 133.72, which is a previous double double bottom formation, right? And let's not forget, we've also spoken about an inverse head and shoulders here. I think actually, I'm not talking specifically about it. Maybe I have added it on the weekly analysis a couple of weeks ago. So you should go on our website and check. So if we do lose that low and the 133.35, then that would invalidate the inverse head and shoulders completely and would open the door down to the previous level of 131.40. Obviously, there are intermediate supports to break, and they would, of course, they could act as supports as well, which means a bounce. However, we'll now focus on the cluster around these longer term supports because it coincides with the 61.8 Fibonacci retracement of the 131.50, 137.30 move. So on the downside, yeah, there is three ways to play this. One would be an aggressive entry, the breakout, with target down to 133.74, and of course intermediate levels, the round levels, because we'll talk about pound, quite a liquid level, quite a liquid currency pair, so kind of respect these levels, if that makes sense. Another solution would be to wait for the breakout, confirm the breakout with a candle close on the 1 hour below this support, then trade it. And the third way would be to wait for a pullback and a retest, and then short that correction, that retest, if that makes sense. So these are, of course, aggressive, conservative, and sort of in the one with the breakout a bit in the middle. Of course, there is potential of a bounce here because this is a strong support level. Whether we prefer that bias to be to the downside or not, the reality tells a different story, right? We have this channel, which have been holding prices in an upward trend since August, okay? And this is likely to cause some sort of bounce. With that said, there is also potential for short-term false break down to that level, and a potential move up to 135.34 as well, and even higher, and then another leg to the downside. And why is this possibility also something that I want to go into? Because the current structure that we see, we have a clear three-wave move to the downside, which typically is followed by a two-wave move to the upside, like this. But however, we have had a double, sort of a double top or a forced break here. So there is still potential for this correction to not be done yet. So we could see something like this and then potential move to the downside. This also becomes a likely scenario or has good chances to happen because the correction we saw so far came up to around the 30% of this move, okay, of this downside leg. A 30% retracement, it's considered a mere pullback, okay? And although it is possible that it's just a pullback, okay, and would add further momentum to the downside, typically we see corrections of this sort of intent, because we start with 5 waves going down, taking us up to around the 1561.8. So I would be looking at both of these scenarios to ensure that we are playing this the right way. So bottom line, key level is the 135 that we currently are struggling to hold. A bounce would take us up to around the 135.50. A decline under 134.50 would open the door to 134 and 133.70 and perhaps lower down. I am cautiously bearish while we'll still remain within this channel. Okay, but the reality is that one way or another, the pound is dealing with a lot of domestic headwinds right now, and yesterday's data it's only adding to this bias. Although there is some improvement because we have seen the Fed turning dovish, I think pound is going to have a bit of a trouble to see any rallies that are going to be uh, eventually and effectively leading to further upside levels like towards the 176. I find this a little bit of a hard, of an odd situation, given that we head into October and then November autumn budget. So keep these levels on your watch list, and we will catch up next time.